Hi class, welcome to the chapter 3 handout 2 answer video. I'm going to share my screen here with you. For this one, you're going to need the chapter 3 handout 2. We start off here with some more practicing with adjusting entries, then we'll do some closing entries and making a retained earnings statement again, just a review of that. So you're also going to need your journal and your trial balance, which I'm going to leave pulled up here. So you have to read off your sheet. Hopefully you're already in here. Hopefully you've already tried this out. Try to get these, and I'll walk through them with you. Okay, so Reynolds Computer Service offers data processing in retail stores. All data have been collected to aid in the preparation for adjusting entries for Reynolds. Prepare the adjusting entries. So I'm not going to go through and make all the entries here. Only what we need to do for the adjusting entries. So for A, computer equipment was purchased from IBM 3 years ago at a cost of $540,000. Annual depreciation is $132.50. Okay. Let's say everything here is happening on 12/31. Okay. So I don't need to worry about when we purchased this equipment 3 years ago. That was already recorded. And we would have done equipment or computers, we could decide whatever we want to call it, would have been debited and cash would have went out. Depreciation is the process of expensing that, and it tells us what our annual depreciation is. So our adjusting entry then becomes depreciation expense. And it's always accumulated depreciation contra account that goes along with that, which lowers the amount that our asset is listed on the book says. It's not for the price, but for the $132,500. Right, that was A. For B, on 12/31, a fire insurance policy for a 2-year period beginning on September 1st was purchased for $12,240 cash. It was all debited to prepaid insurance. That's all this imagine there was no balance there before they paid that. Okay, so when we would have paid this, we would have debited prepaid insurance and credited out cash. That was done on September 1st. Okay, now it's December 31st. We need to go through and calculate. And now we are going to have insurance expense. This is step 1, identifying. What accounts are we going to have? Insurance expense is going to increase. And our prepaid insurance is going to go down. And next we have to calculate the amount. Okay. So the $12,240 that was originally paid was for 2 years. So I want to divide that by 24. Because there's 24 months in a year to find out that it's charging me $510 a month. That's how much it is for a month of insurance. So now we're doing our adjusting entry December 31st. This started on September 1st. So we have all of September, all of October, all of November, all of December. So we have 4 months. We get 2,040. That is the amount of insurance that has been used up to this point. 4 months at $510 a month. So that is the amount that we need to expense. And if we needed to know our prepaid insurance amount, how much was left, we take our beginning balance of the 12,240, subtract out the 2040, and it'll tell us how much insurance is still on the books that is prepaid. Okay, C, we have a contract to perform the payroll accounting for bank department stores on December 31st. 5,450 have been performed but are unbilled. We have performed the duties, so we have service revenue. We need to make sure we get it in the right period. So service revenue, 5,450. It remains unbilled. Even though it's unbilled, we perform the services people owe us. So we were going to say, since people owe us, we're going to debit the asset accounts receivable for the 5,450. All right, on D, Reynolds rents 12 computer terminals for $65 per month per terminal. At December 31st, we owe terminals for a half month rent. Maybe we sign this contract like on the 15th of the month. So every 15th we gotta pay. Now it's December 31st. We need to record because we have used up half a month worth of rent on these computers. So we need to record a half month of rent expense. Although we are not paying them today. Okay. Unrecorded, so we didn't pay them in advance either. So that means we owe them in the future. So we will make a rent payable. In order to figure out the amount, okay, it says we owe for a half month rent on each terminal. So we owe half of the rent. So if we have 12 computers, times $65 per month. We get 780. And then we divide that by 2. We see that we owe 360 is the amount of the rent that has been used up, half of the 780. Okay. So our rent expense then becomes 360, our rent payable becomes 360. And then the next month when we actually go to make the payable, we'll expense the other half, take the payable off, and pay the full amount in cash. All right, E, Perry Sex Service prepaid for more. Prepaid rent for time on the computer. All right, so they have given us, it doesn't even tell us what amounts that there were. When Reynolds receives cash, we would credit or debit our cash because it's going up and credit on our revenue. Okay, and it's saying that at the end of the year, we have earned 1,810 because they've actually came in and used the computer service. So for E, when we're going to recognize our revenue now, they have paid us in advance. So when we recorded it, we put it into unearned revenue. But now we've earned some of it. So whatever we have earned, we need to put into a regular revenue account, which we'll call service revenue for 1,810. We no longer owe the 1,810. Just ignore my discrepancy in numbers there, okay? So that's how we would make that adjusting entry. We always want to record for what was earned, moving into the regular revenue. Okay, so for number 2, then after consulting, because we retained an imbalance of 38,100, we recorded the following accounts at balance sheet end, prepare the closing entries. Okay, so for here in number 2, our closing entry number 1 is we need to close out our revenues. Revenues are normally credit balance. So we need to take our revenues and do a debit entry to them. So we will debit Sales revenue by 162,820. That increases our retained earnings, which is an equity account, as a normal credit balance. So to make it go up, we make a credit entry for the same amount. Number two, we need to take our expenses off. So our expenses are going to lower our retained earnings. So to make that equity account go down, we make a debit entry. Debits go first, and we'll put it there. Although I do not know the amount yet, because I would have to go through and list all of these. Salaries expense. Current expense. Facilities expense. Supplies expense. And income tax expense. Since those were normally debits, we would have to do all of those on the credit side. 660, 250, 8415. If we have them all on there, we can add it all up. We have 129,473. The question doesn't ask here, but what is our net income here? Our net income in the situation, we take all our revenues, 162,820, subtract out all our expenses. So we'd have 33,347. That was our net income. Finally, number three, we need to remove our dividends. The dividends are a normal debit balance. So we need to credit them to make them go away, and they also lower the retained earnings. That amount was 8,400. Finally, it asks you to make a statement of retained earnings. So remember, we'd have the company name, statement of retained earnings, 4-year ending. Start with our beginning retained earnings, which was given to us at 32,000, plus our income, which we calculated at 33,347, minus our dividends, 8,400. Which gives us a new retained earnings of 56,947. And this is the number that will go on to our balance sheet. And then we carry forward to the next year. And all our temporary accounts have been closed out of that retained earnings, so it is all accounted for. Journal entries, the closing ones are pretty much the simplest because you just take the total amount and just offset it into retained earnings. And that's kind of showing here how getting retained earnings, it was increased by your income, so increased by revenue, decreased by expenses. and it was decreased by dividends. All right, so that's it for chapter 3. Do not hesitate to reach out to me if you have any questions. Best of luck. It is test time now. I'm sure you will all do well. Follow your outlines as your guide.